How do you run your property portfolio like a business? Are you serious about investing in property? Then you want to make sure that you run your property portfolio like a person would run a business. Hi, I'm Jaco Grobbelaar, the founder and managing director of Prosperity Enterprises. When you build a property portfolio, you need to make sure that everything is in place to scale this property portfolio and to build something of significance. You want to make sure that the consistency is there so that every single year, year in and year out, you can expand your property portfolio and you can build your asset base and you can build your wealth. So there's 5 factors that I want to discuss in this video on how you can run your property portfolio like a business. Firstly, make sure that your property portfolio is in an entity of its own, with a bank account of its own, and with its own financial statements. When you build a property portfolio, you do not want to buy property in your own name. You want to make sure that you buy your property in an entity such as a company, and also to make sure that that company is not owned by you directly, but that that company is owned in a holdings trust. Why is structuring so important? Why do you need to have the right structure in place? And there's 4 reasons for that. Firstly is you want to build a bigger property portfolio. When you buy your properties within an entity, you make it possible to build a bigger property portfolio. Second are the tax benefits of using the correct structuring. Thirdly is asset protection to protect your assets. And lastly is for estate planning benefits. You want to make sure that one day when you pass away, all of these assets are protected. Then you want to have a separate bank account. And the reason for this is so that you can properly track your inflows and outflows, and so that financial statements can easily be prepared. This also makes your property portfolio look much more professional. And you want to have financial statements of its own. When you have an entity, you are usually required to have financial statements in place for the tax returns that need to be submitted. But when you go to a bank or to a financier or somebody that funds you, they take you much more seriously when you can show them financial statements and show them exactly how your property portfolio is performing. Then you want to make sure that you've got sufficient cash reserves in place. When you run a business, make sure that you don't run out of cash. Cash is king. So this is where you want to make use of your access bond or your flexi bond. What is an access bond or a flexi bond? An access bond or a flexi bond is a facility where you can pay funds in that you can withdraw at a later stage. But those funds that are paid in reduces the interest payment that you would pay on a monthly basis. And what that does is one of 2 things. Either it reduces your monthly bond payment, or alternatively it keeps your monthly bond payment the same, but a bigger portion of that payment is allocated to capital, which means that your bond is paid off faster. Now, the reason why cash reserves are so important is because you do not want to be caught with your pants down. You want to make sure if there's an emergency, or when there are interest rate escalations, or when you are maybe sitting with a tenant that's not paying, or maintenance that needs to be done on the property, that you have sufficient cash reserves in place to fund those outflows. Then you want to have professional tenant management in place. When you run your property portfolio like a business, you have systems in place. And you have systems in place when it comes to your tenants, i.e. your clients, as well. So the very first thing that you want to do when it comes to tenant management is proper vetting. Make sure that you vet your tenants well. That the people that you place in your property portfolio are going to pay you on a monthly basis, and that they are going to look after your property. How do you do that? Look at affordability, look at the credit score of that prospective tenant, and also look at previous landlord references. Then you want to make sure that you have a proper lease agreement in place. Now, don't go and pull the first free lease agreement off the internet. Make sure that you have a proper lease agreement in place that covers all the points that need to be covered when it comes to managing your tenant. Then you want to look after maintenance for your properties. You want to make sure that you keep your properties in ship shape. And as you look after your properties, your tenants will look better after you as well. So when something is broken, fix it. Make sure that you can efficiently and effectively get things repaired and get things done when a call is logged from a tenant. And then there are property inspections. You want to make sure, at least when a tenant moves in and when a tenant moves out, that you do a proper property inspection with photos of everything, so that you can show the entry inspection, the exit inspection, and that those can be compared, so that any cost that the tenant should be liable for can be deducted from the tenant's deposit, and also to make sure that everything that is not in place in your property, everything that is broken or that needs to be repaired or maintained, can be taken care of. And then lastly, you want to have a proper rental management system in place. Please do not make out your invoices on Excel. Make sure that you've got a system in place that can keep track of your tenants, that can keep track of who owes you what deposits are being kept. And there are great systems, many of them for free, that you can use to manage your property portfolio and to manage your tenants from a billing and collections perspective. You then want to have your property investment team in place. Make sure that you have mentors that can teach you and guide you in your journey to build your property portfolio. So mentors can be authors, people's books that you are reading, seminars that you attend, people that you can speak to on a regular basis, or people that have achieved what you have achieved already, that can help you and guide you in your journey as a property investor. Secondly, you want to have a good accountant in place. Now, this is not just an accountant that do the books of normal businesses. Ideally, you want to have an accountant in place that understands structuring and understands property investment. So you want to have a trust accountant in place to look after your trusts and your companies, and then also an accountant that knows not just how to pay less tax for your entity, but also how to get the most financing. So make sure that your accountant understands structuring and understands property investment. Then thirdly, you need legal advisors in place. Now, those are your independent trustee for your trusts, your conveyancing attorney, and also your commercial attorney. These people play a critical role in helping you in administering your trust, in transfers of your properties, as well as with contracts. Then you also need financing advisors in place. These are people like your bond originator and your banker that can help you to get the best financing for your property acquisitions, and also to get financial information like bank statements, etc., quickly when needed. You also need property agents and rental agents in your property investment team. Property agents that can bring you good deals, that can help you when you want to acquire properties, also when you possibly need to sell properties, and then a rental agent if you are not managing the properties yourself, to help you with the management of your property portfolio. And then lastly, you need a maintenance and structuring team in place. These are people that can help with repairs, that can assist with maintenance, that can do property inspections when you are acquiring a property, and that can help with anything around structural or maintenance issues that you may have with your property portfolio. Then the last point on how to run your property portfolio like a business is automation, software and automations. Make sure that you are making use of real estate websites and portals where you can look for properties that you are acquiring, that you are making use of online platforms or software where you can access title deed information, where you can see how much a property was acquired for, how much similar properties are selling in the area for, and then also make sure that you've got proper rental management software in place so that your rental management can be done well. And then lastly, make sure that you've got property investment software in place where you can run formulas like gross rental yield, net rental yield, return of investment, and internal rate of return to make sure that the properties that you are acquiring are good properties to invest in. Thank you for watching this video. If you would like to see more content like this, remember to like and subscribe.